Hello there, Hector Dabil here. Welcome to a new video. Today we're going to be covering something that doesn't quite always happen. You're not going to always be able to find or to apply the techniques we're going to be covering on this video, but whenever it does happen, the trading signals you are going to get as a result are going to have a much higher probability. Okay, it's going to be a high quality setup, a high quality signal, precisely because we're going to be leveraging two forces. All right, two forces there. We're going to be blending our typical intraday trading approach, obviously based around the London Open breakout strategy, and the longer time frames. Okay, basically what we are going to be doing is searching for London Open breakout setups around long-term levels of support and resistance. All right, here is the idea. Let's assume we do have a tight sideways horizontal Tokyo range happening at the extreme of the previous day's range. We do have an intra-week bias as per the last few days. The price has been flapping sideways, throughout the Tokyo session. Basically, we have a valid trading opportunity, or at least a valid setup as per the London Open breakout strategy, right? Well, London market opens up 3 a.m. in the morning. We are ready to wait for either a breakout to the upside or to the downside in order to search for our opportunities. But in the last minute, we decide to zoom out into the longer time frames. The 4 hours time frame, the daily time frame, the weekly time frame. At any rate, anything beyond the intra-week scope, and we notice a major level of resistance in the let's assume the daily time frame, right? A major level of resistance just above the Tokyo range. Okay, basically what we have is the Tokyo range finding resistance or finding a ceiling just below a long-term level of support or resistance. In this case, this price is just below that level. Well, the thing is that sometimes, or actually most of the times, you need volume, you need momentum in order to breach through a level of a long-term level of support and resistance, right? You already know that throughout the Tokyo session, the trading volume kind of slows down, all right? There is just not that much going on in the market, okay? The trading volume, slows down, settles down to a crawl, and we just don't have the punch, the energy enough to breach through a level of support and resistance, a long-term level of support and resistance. So what usually happens is that we require for the London market to kick in, you need the London volume, the massive London volume to appear into the market before we get a reaction of that level of support and resistance. All right, either the breakout or the bounce. All right, either way, we need the London volume to give us the next market move, because like I say, Tokyo is just too quiet, okay? We are not going to get any major market reaction around an important level of support and resistance in Tokyo. It's just, the market is just too quiet, okay? It's just too lazy. Well, the idea here is to wait as the London market opens up to see the type of reaction we get. If price bounces off that long-term level of support, resistance in this case, basically what I mean is that price breaks the lower band of the Tokyo range, you can indeed expect that the overall market bias for the rest of the day is going to be down. All right, it's going to be down. Why is that? Well, again, because we are going to leverage two forces. We are going to be riding on two different sets of trading volume. The first one is going to come from intraday traders such as yourself, who spotted the breakout to the downside of the Tokyo range and who are going to be looking to position themselves to the short side, and therefore they are going to be creating selling pressure in the market. But also we are going to be riding on the volume, on the momentum created by long-term traders. Okay, basically people who were looking or who were waiting for price to reach this long-term level of resistance. So once that actually happens, they can click on the respective buttons. So again, we have two forces. One is intraday force, and the other one is a long-term force, a long-term a force coming from the long-term chart. We are going to be combining that momentum, so the quality of the signal, the probability of the signal, in this case a short signal, is going to be massively increased. All right, again, because we are going to be leveraging two forces in the same direction. All right. Obviously, you will not always be able to find, or you should not be actually waiting for London Open breakout setups that occur right off a long-term level of support and resistance. Most of the time, it will not be the case. Most of the time, the London breakout will happen anywhere in the chart. It doesn't necessarily have to happen anywhere near a long-term level of support and resistance, but whenever those two events, the London breakout and a long-term level of resistance or support, happen at the same junction of the chart, again, as a result, the trading signal you will get will be a much better or a higher quality trading opportunity. All right. All right, well, let me now present a few different scenarios that, I've encountered a number of times throughout the years, my own daily trading routine that have always yielded a high win-loss ratio, okay? Okay, the first one we're going to be seeing on this slide presentation is going to be a horizontal level of resistance just above the Tokyo range, all right? Just above the Tokyo range. Obviously, the same would hold true up, the other way around. If we had a level of support just below the Tokyo range, okay. Basically, if you turn this drawing upside down and you had the level of resistance, of support just below the Tokyo range, it would be equally valid, okay. So let's assume we are looking into our on our hourly chart, and we see that intra-week bias, then we see the Tokyo range, etc., etc. Then we zoom into the daily, 4 hours, weekly, whatever, into the longer time frames, and we see on the daily chart, for example, that price has peaked before, at a level just above the current Tokyo range we are looking to trade. All right. Basically, what we have there is a major turning point, a major swing point in our chart, in our long-term charts, and therefore we have a key level of resistance just above that level. Well, any type of short breakout you may get off that level, or any type of fake breakout to the upside just to see price turning around and then giving us an entry to the downside, that's going to be a high quality trade, a very, very high quality trade. Again, resistance, long-term level of resistance. There will be plenty of long-term traders searching to sell off that level. So we are going to have extra momentum to the downside. Not only intraday traders looking to exploit the intraday move to the downside, but also long-term levels clicking on the respective sell buttons, looking to exploit further profits to the downside as well. So that's usually a very high probability trade. Again, Tokyo range, a valid Tokyo range, giving us a reversal as it bounces right off a level of horizontal resistance in this case. Okay? All right, another one that I like very much as well is when we see price breaching through that level of resistance, all right, and then giving us the Tokyo range just above the previous the previous swing point. So this would be the previous day's range. Basically, we got a breakout day, and then throughout Tokyo things calm down a little bit, gathering momentum for another up push, okay, in the direction of that breakout. Let me go back into the previous slide. As we can see on the previous slide, we didn't quite see the breakout on the previous day, and in this time around, we would be looking to trade the reversal. If we got the reversal, if we got the breakout to the upside, well, just give me a second. We are going to be talking about that in just a couple of minutes. But at any rate, if the Tokyo range happens just below a level of resistance, the best possible outcome would be for us to see a breakout to the downside. That's where the best, that's where the highest win-loss ratios are going to be scored. Okay, in my experience. Now, I was just talking about the eventuality in which the previous day's range actually broke through that previous level, that previous swing point in the longer time frames. If right after that price consolidates just a little bit throughout the Tokyo range, throughout the Tokyo session, if we get an up move, an early up breakout as the London market opens up, trust me if I say that more often than not, the day as a whole, if we zoom into the daily time frame, you will see a nice up candle, right? A nice green candle for the upcoming trading session, all right? So any breakout to the upside is going to be a high probability setup, high probability trade. This time around, please notice how we are trading a continuation move, okay? We are not going to be trading a reversal move, guys, such as before. We are now going to be trading a continuation move. Again, I will just talk in a couple of minutes what happens if we get a breakout to the downside, all right? Now, pretty much the same thing, but with a diagonal level of support and resistance, or what's the same, a trend line, okay? Instead, basically the same thing as we saw here, with a horizontal level of support and resistance containing the Tokyo range. Well, this time around is exactly the same, but with a trend line, okay? We have in the daily time frame or any other longer time frame a massive downtrend, okay? Then as per the last 2-3 days, maybe we've seen a retracement price coming back to retest that trend line. If early in the morning as the London market opens up, we get a breakout to the downside, hey, be all over that, because that's going to be a high probability trade, all right? Now, obviously, conversely, if what we are seeing is the Tokyo range happening immediately after a breakout of a long-term trend line, okay, just as we were seeing here, right, that Tokyo range happening just above or just after the breakout, probably the previous day was the breakout day. Well, if we see exactly the same thing but on the trend line, again, we want to see an early morning breakout to the upside in order to continue exploiting the up move, the up momentum generated by that up breakout. Okay, like I say, horizontal levels of support and resistance or diagonal levels of support and resistance are basically the same thing in their nature, all right? They just take shape on a different manner, but the nature of the level of support and resistance is basically the same thing. So, depending on whether the Tokyo range takes place before the breakout or after the breakout, well, we would be searching to trade either one way or the other, okay? But like I say, at the same thing, at any rate, it doesn't matter whether that key level of, that key reference level on the longer time frames is either horizontal or diagonal. All right, now let's get ugly. We've already seen how, well, if we get, we've already reviewed on the last few slides what the ideal outcome would be on each particular scenario. If we have the level of resistance above the Tokyo range, the ideal situation would be to see a breakout to the downside, all right, in order to exploit a potential, but this reversal move, okay, upon having bounced off that level of resistance, all right. However, what happens if what we get is early in the morning a breakout to the upside? What's the course of action? How should we react? Or, more importantly, how should we trade that eventuality where price is actually breaking in the direction or facing or against that long-term level of resistance? Well, here is the thing. As I have already mentioned before on previous videos, We small traders, we retail traders, we are not market leaders. Okay, we are not market leaders. We are not meant to. We are not meant to open the way. We are not meant to anticipate the market moves. All right. Our job as small traders is to piggyback, is to wait for a market reaction. Okay, we wait for the market to hint the next directional move, and then we just simply again piggyback. We just duck behind the big guys. Okay, the fund managers, the central bank traders, the guys who are actually creating the market moves, and we just simply again duck behind their behind their backs, and we piggyback all along. All right, we don't make the move, we simply follow after as fast as possible, as quickly as possible, but after we need to wait for the move to actually appear on our charts before we jump on board. All right, that's the idea here. So in this case, if we got the breakout to the downside, we would not be leading the way. We would be simply jumping on board as quickly as possible, as quickly as we possibly can, but only after the move is already appearing on our chart. We are already seeing the bounce of that level of resistance, correct? If we get a breakout to the downside, the market, the price, is already reacting to a price event, to a market event, which is that level of resistance. Okay, the market is already telling us or hinting us the next directional move. Our job, our responsibility is just to jump on board as soon as possible. So we just piggyback on the way down. All right. Well, in the other hand, if we get a breakout to the upside, facing that level of resistance there, and if we decide to jump on board as price is breaking to the upside again against that level of resistance, we are indeed taking a higher degree of risk in our position, because we would be positioning ourselves as the market leader. We would be leading the way towards the breakout. Okay, the breakout is just happening. All right, the breakout is just happening. We still don't know whether the breakout is gonna pull through. We still don't know whether we are gonna be getting a fake breakout. Remember when before I was telling you guys to not just bracket the range? We don't bracket the range precisely for that, because we don't want to be the one, the soldier at the front line opening the way. Okay, we want to be the guys simply cowardly sitting on the back line, just waiting for those guys to open the way before us. All right, so if we have a major swing point, a major focal point in our long-term charts just above a breakout point, do we really want to position ourselves on the front line, and with our small trade, trying to push price above, breaching through the enemy lines? Do we really want to do that? We can if we are an aggressive trader. All right, it all depends on how aggressive you are with your trading. All right, how the degree of risk you are willing to take on a daily basis. If you're a conservative trader, if you get this type of setups, you may want to just limit yourself to breakouts to the upside. If you get the breakout to the downside, you may want to wait. You may want to simply not take that trade at all. All right. Again, it all depends on how aggressive you are. Now, truth to be told is that, well, if you take this entry and the breakout actually pulls through, well, you're gonna make quite a home run there, because if a breakout does push through, usually we see a nice up move, a nice run in momentum, okay, in the direction of the breakout. But again, sure, higher potential of earnings, also higher potential of risk. So it's all up to you. Now, I myself, at the beginning, while you get accustomed to the whole thing, to the whole London Open breakout thing, I would recommend you at the beginning to simply limit yourself to well, two breakouts to the downside in this case. Obviously, look, if we are in this scenario where the breakout has already happened, now well, at the beginning it would be a wise idea to maybe pass on any breakout to the downside, because if you take breakouts to the downside, you will be facing that short entry just against that previous level of resistance, all right? And now, as price moves down, now that level may be working as support, all right? So, again, like I say, if the Tokyo range happens at the right above that key level, you may want to limit yourself to up moves, to up breakouts. If it happens below, you may want to limit yourselves to down breakouts, okay, down moves, at least at the beginning, until you are fully familiar with the London Open breakout strategy, okay, and with this type of scenarios where you blend the longer time frames with the intraday trading approach. Alright, well, now I'd like to show you something that happened not long ago. Alright, we are looking into the sterling pound against the Australian dollar daily time frame. This is the current market price, alright, but anyway, if I scroll back, this is a chart that I was following actually myself in real time. Let me squeeze that in just a little bit to see. There we are. All right. So, what do we have here? Well, I had marked in my chart this triple level of support. In fact, it was some sort of a channel. All right. Price had been channeling up and down for actually 2 months there, all right, 2 full months there. Eventually it gave way to the downside. Okay, I was basically following this chart in real time, just expecting or waiting for a breakout either to the upside or to the downside. Eventually, let me zoom in a little bit more. All right, eventually we got the breakout to the downside with that nice, beautiful down bar. All right, do you see that massive red bar? All right, pushing price below the, that triple level of support in momentum. Well, once I saw that, I actually like to follow my charts on the intraday time frame, because usually you get very, very profitable intraday trades based on market reaction from long-term levels of support and resistance. This is the key level that I'm mentioning here, okay? The level that I want you guys to focus, that's the breakout, right? So as I was saying before, sometimes you get beautiful intraday trading opportunities, based on market reaction of level of support and resistance from the longer time frames, in this case on the daily time frame. Either the breakout, such as in this case, all right, or a bounce, okay? Or a bounce, such as in there. All right, well, anyway, so we got the breakout. I zoomed into my intraday charts. Let me now show you the setup chart for the London Open breakout, the 1 hour time frame. Okay, that's the time frame we are looking in right now. Let me scroll forward if I can find the actual breakout. Just give me a second here, guys. I keep on scrolling forward. Wow, where did I go here? Oh, all right. Not yet, not quite yet. Just bear with me 1 second, guys, please. All right, not yet. Oh, there we are. All right, breakout. All right, massive breakout. This is the breakout, the long red breakout candle that I was showing you guys before on the daily time frame. Okay, now if we scroll a little bit more, all right, breakout day. The beginning of the day, meaning the beginning of the Tokyo session, you mark that up, right? Mark the Tokyo high, the Tokyo low. See what happens. 1, 2, 3, 4, 5, 6, 7, and 8. The London market opens up right there, and see what happens there. Nice push to the downside for quite a fast profit there. Actually, let me tell you exactly how far price ran up on the breakout, from 175.82 to 174.86. So 96 pips within 1, 2, 3. Oops, just let me take off the cross there. 96 pips within 1, 2, 3 hours. All right, very nice, profitable trade. Breakout, congestion through Tokyo. The London market opens up. Nice run down to the downside. Okay, nice profits to be made there. Again, this is nothing but basically marking. Let me go back into the daily time frame just for a second. All right, nothing but marking the key levels on the longer time frames. Wait for price to hit that level, and either if we get a breakout, search for a London open breakout setup immediately beyond that level. Okay, immediately after the breakout. Usually the London open breakout setups give a very nice profits instantly. I mean instantly, very fast, okay, within the first few hours of the London session. All right. All right, well, let's take a look into another example, the euro against the American dollar, also the daily time frame. We've been going through, as of lately, to a rather nice down push in the market, coming from a period of an uptrending price action. Let me actually scroll to the beginning of this trend, which is there. We have a few swinging points in this uptrend. Okay, price certainly making higher swing lows and also, well, higher swing highs, isn't it? Let me try to draw the outer trend line in this uptrend. All right, there we are. Okay, nice uptrend, and like I say, price swinging to the upside for quite a while. Eventually we get the breakout, okay? Eventually price breaches through that trend line, and as we've been seeing throughout this whole presentation, once price hits or meets a long-term level of support and resistance, it's always worth, it's always worth it to zoom into the intraday charts, because you may get some rather profitable trading opportunities on the intraday charts based around those key decision-taking levels on the long-term charts. So, right as we saw the breakout, why don't we zoom into the 1 hour time frame, into the intraday chart? Let me again scroll forward all the way. This is gonna take a little bit. Just bear with me, please. That's one bounce of the trend line there. We should be getting a second bounce soon, or maybe the breakout in itself. Oh no, there it is, the second bounce, and we keep on. Oh, there we are. We have the breakout. This was the breakout day. All right, that's the beginning of the day there. So on the previous day we had a breakout. Then, as you can see, we had, this is the beginning of the day. So this is the Tokyo range in there. All right, Tokyo range. 1, 2, 3, 4, 5, 6, 7, 8. London opens up at that time. All right. We mark the level, all right, the Tokyo range, and as you can see, well, we had, as the new London session kicked in, as the London volume kicked in the market, well, price ran down for, well, let's actually see how far it went, from 148.49 to 147.55. So again, another 90 pips within the hour. That being the high for the Tokyo range, that being the low for the Tokyo range. I don't know whether we got a valid breakout pullback continuation there. Maybe we didn't. Okay, maybe this was a straight breakout, one of those opportunities where price simply takes off without you. But at any rate, that's not important. What I want to illustrate here, what I want to point out here, is that whenever you see price either getting a bounce or a breakout of a long-term level of support and resistance, if you get a Tokyo range immediately after, a valid Tokyo range obviously, immediately after that you can base a London open breakout intraday trade, right after getting a price reaction of that long-term level of support and resistance, be very ready to take that trade, guys. That's a high probability one. Okay, let me now show you another example, this time around on the sterling pound against the American dollar on the 4 hours time frame. As you can see, you don't really need to zoom out into the very long-term charts, okay, such as the daily, weekly, even monthly, okay. You can still exploit the long-term levels of support and resistance, even if they come from the 4 hours time frame. All right. Anyway, there's one particular level on the cable that's been working as of lately as a key level of support and resistance. All right, that's the 162.50. All right, and well, as you can see, it worked there as resistance. Then once again, then we got the breakout, worked as support once again, and eventually we got the breakout. Actually, we got the breakout this morning. Okay, about 3 hours ago. I just noticed this setup this morning because I was following it in real time. You know, my standard daily routine. Anyway, so let me now zoom into the 1 hour time frame. Just give me a second. Actually, I'm going to show you all right, that's where the day started this morning. Like I say, the breakout took place 3 hours and a half ago. All right, this morning as the London market was opening. Now, take a look at. This is the beginning of the day. Okay, this is the previous days there. Whoops, someone just knocked on my door. Anyway, this is the previous day's move, okay, to the downside. We have the Tokyo range in there, which is not really that tight, at any rate, not really that tight, but that's not what I want to focus on this video, okay? I just want to see you guys how we have the Tokyo range just above, all right, just above that key level of support and resistance, which worked as as support once again yesterday, right? So high for the Tokyo range, low for the Tokyo range, just above, sorry, just 5-10 pips above that level, okay? 1, 2, 3, 4, 5, 6, 7, 8. That's where the London market opens up. As you can see, market acceleration as usual as the London market opens up. And this time around, you can probably see a small little breakout pullback continuation pattern in there. All right. Do you see how we got the breakout, then price retracing? I'm not gonna zoom into the 15-minute time frame. That's not the point of this video. But anyway, do you see how price retraced a little bit to retest that level again, and from there, bang, down it went for another 60-70 pips? Well, that's another example of, well, actually a fantastic example of an aggressive, all right, an aggressive London open breakout setup happening just above a level of long-term support. 2 days in a row of a downward bias. The Tokyo range, which, like I say again, it's not really that, not really that tight, a little bit too wide for my taste, but at any rate happening at the lower end of the previous day's range. Also on a downtrending week, early morning breakout, and off it goes to the downside. Okay, like I say, I was just following this thing in real time this morning. This is an aggressive setup, guys, because by the time by the time we get the breakout, we need to reach through that level of support. All right. The beauty here is that we got the breakout pullback continuation pattern below that level of long-term resistance. Okay, you see that? All right. You see how by the time we got that breakout pullback continuation there on the 15 minutes time frame, we did indeed broke below that long-term level of support. All right, so yes, it is an aggressive stance. The ideal location for that Tokyo range would have been down here, okay, meaning that this was the breakout day, and then that was the congestion, and then we would have been able to exploit the continuation move. But as the breakout pullback continuation pattern did happen below that level of support, well, I guess it would have been okay to take it. Okay, it all depends, again, as usual, on how aggressive you are with your trading. Well, it's time to wrap up this video. I guess the moral of the story here is that, even though the London Open breakout strategy is obviously an intraday trading approach, an intraday trading technique, that doesn't mean that we should forget altogether about the long-term charts, right? Just as we take into consideration the intra-week bias, just as we take into consideration the location of the Tokyo range and the shape of the Tokyo range, well, why don't we also take into consideration those key levels of support and resistance on the 4 hours, on the daily, on the weekly time frames? All right. So my recommendation, whenever you are searching for intraday setups, early in the morning, when you sit at your trading station, if you find any intraday setup, always ask yourself the following question: where is this intraday setup taking place as far as the long-term levels of support and resistance? Okay, just zoom into the 4 hours time frame, daily, weekly time frame, draw your key, the main horizontal and diagonal levels of support and resistance, just the most important one, guys. That's going to take just 1 or 2 minutes, and then analyze whether, well, are we getting any bounce of those levels? Are we about to hit those levels? Or perhaps have we just gotten any breakout of those levels? Okay, that's going to help you gathering an extra piece of information, blending that piece of information into your intraday trading analysis, and as a result, your win-loss ratio is going to increase. Okay, it's going to be significantly improved. And well, you already know how to operate here. If you are getting a bounce, right? If you are getting a bounce off a long-term levels of support and resistance, you want to be searching for short intraday trading opportunities. In the other hand, if you got the breakout, right, of those long-term levels of support and resistance, let's say on the previous day, well, you want to be searching for long trading opportunities. Okay, and just that little extra piece of information, trust me, it's going to significantly increase your win-loss ratio. All right, so trust me, it's worth taking a quick look into the longer time frames. All right, guys, that's all for this video. I hope you enjoyed it. Bye bye.